Imagine asking a room full of young adults what investment could change their financial future. Many would mention stocks, real estate, cryptocurrency, or the next fast-growing company. Few would point to the decisions they make before investing a single dollar. Yet this is exactly where Warren Buffett has spent decades directing people's attention. Buffett became one of the greatest investors in history, but his advice to young people rarely begins with the stock market. Instead, he speaks about something far less exciting, yet infinitely more valuable: investing in yourself. Your habits, your judgment, your reputation, your ability to learn. These are investments no market crash can erase, and they quietly shape every financial opportunity that follows. This idea feels almost too simple. In a world that celebrates overnight success and constant action, slow personal growth rarely makes headlines. Most people spend years searching for the perfect investment opportunity while overlooking the daily choices that determine whether they will recognize a good opportunity when it finally appears. The books you read, the skills you develop, the people you spend time with, and the habits you repeat each day may not seem important in the moment. But over decades, they compound just as powerfully as money. Small improvements become lasting advantages, while small compromises quietly become expensive mistakes. Perhaps that's why Buffett has remained remarkably consistent throughout his career. Markets change, technology changes, economies rise and fall, but the principles that build capable, trustworthy, and disciplined people have changed very little. And according to Buffett, those principles are the foundation upon which every lasting fortune is built. Most people imagine that financial success or failure is decided by one defining moment: a brilliant investment, a major business opportunity, or an unexpected economic crisis. But Warren Buffett's philosophy suggests something very different. The future is rarely shaped by one dramatic decision. More often, it is built through thousands of ordinary choices that seem too small to matter. Every day, people decide how they spend their time, where they direct their attention, how they use their income, and whose opinions they allow to influence them. These choices rarely produce immediate consequences, which is precisely why they are so easy to overlook. Yet, like compound interest, their effects accumulate quietly in the background. An investor asks whether today's decision will create greater value tomorrow. A consumer often asks what will provide satisfaction today. One mindset delays gratification in exchange for future freedom. The other frequently trades tomorrow's opportunities for today's comfort. Neither decision feels significant in isolation, but repeated over years, they lead to remarkably different outcomes. The same principle applies to preparation. Some people spend calm periods building knowledge, strengthening skills, and saving resources. Others wait until circumstances force them to react. By then, many of the best opportunities have already passed. This is the hidden cost of small daily decisions. Financial futures are rarely created overnight, and they rarely collapse overnight either. They are shaped quietly, one habit, one choice, and one ordinary day at a time. Understanding this makes it easier to see why Buffett has always focused less on predicting the future and more on preparing for it. Long before Warren Buffett became one of the world's most successful investors, he was simply a curious young boy who viewed the world differently. While many children were focused on spending money, Buffett was fascinated by how money was created, multiplied, and preserved. That curiosity would eventually become one of his greatest competitive advantages. As a teenager, he delivered newspapers before school, not merely to earn income but to save and reinvest what he earned. He experimented with small businesses, sold everyday products, and constantly searched for ways to make each dollar work a little harder than the last. These experiences taught him lessons that no classroom could fully provide. He discovered that wealth was less about how much money you started with and more about what you consistently did with it. Equally important was his appetite for learning. Buffett spent countless hours reading books, company reports, and financial statements while most people his age had little interest in such subjects. He understood early that knowledge compounds just as reliably as money. Every page he read sharpened his judgment, making future decisions slightly better than the ones before. His journey was also shaped by remarkable mentors who encouraged independent thinking and disciplined analysis. Rather than chasing status, appearances, or quick recognition, Buffett focused on building competence. He believed that becoming more capable would naturally create greater opportunities over time. Looking back, it becomes clear that Buffett's greatest asset was never extraordinary intelligence or privileged circumstances. It was a mindset built on patience, curiosity, continuous learning, and the willingness to think differently from the crowd. Those habits were established long before the billions ever arrived, proving that character often compounds before capital does. By now, a pattern begins to emerge. Warren Buffett's greatest lessons were never designed solely to help people become better investors. They were designed to help people become better decision makers. And according to Buffett, the most valuable assets you can own are often the ones that never appear on a balance sheet. Character is one of those assets. A reputation built through honesty, reliability, and integrity takes years to develop but can create opportunities that money alone never could. Buffett has often remarked that it takes decades to build a reputation and only minutes to destroy it. That simple observation reveals why he places such extraordinary value on trust. In business and in life, people are more willing to invest in someone whose judgment and character have proven dependable over time. The same principle applies to knowledge. Buffett famously spends much of his day reading because he believes every book, annual report, and thoughtful idea adds another layer to his understanding of the world. Learning is not an activity with an endpoint, it is a lifelong investment whose returns become increasingly valuable as experience grows. Equally important is independent thinking. Markets are filled with opinions, predictions, and constant noise, yet Buffett has consistently avoided following the crowd. Instead, he encourages people to remain within their circle of competence, make decisions based on facts rather than emotions, and evaluate value instead of popularity. What everyone else believes today is often far less important than what will prove true years from now. This mindset also explains his cautious approach toward unnecessary debt and impulsive decisions. Short-term excitement can feel rewarding, but lasting wealth is usually built through discipline rather than drama. Clear thinking almost always outperforms emotional reactions when measured over decades. Markets will rise and fall. Technology will evolve. Economies will expand and contract. But honesty, patience, sound judgment, continuous learning, and rational decision-making never lose their value. These qualities continue compounding long after temporary trends have disappeared, making them the foundation of Buffett's philosophy and one of the greatest advantages any young person can develop. If Warren Buffett's principles are so straightforward, why do so many intelligent people struggle to follow them? The answer is rarely a lack of knowledge. More often, it is human psychology. Our minds are naturally drawn toward immediate rewards. We feel the urge to act when markets become volatile, to compare ourselves with people who appear more successful, and to chase opportunities that promise fast results. These instincts may have helped humans survive in uncertain environments, but they often work against us when building long-term wealth. Fear is one of the strongest influences on financial decisions. During market declines, many people sell quality investments simply because others are doing the same. When prices rise rapidly, that fear often transforms into the fear of missing out, encouraging people to buy without careful analysis. In both situations, emotions quietly replace judgment. Buffett has spent decades doing the opposite. While headlines compete for attention and short-term predictions dominate financial news, he remains focused on underlying value, business fundamentals, and long-term outcomes. His calm approach is not the absence of emotion, it is the discipline to prevent emotion from controlling important decisions. Social comparison creates another hidden obstacle. It is easy to measure progress against someone else's lifestyle, income, or investment returns. Yet those comparisons often encourage unnecessary risks and impulsive choices rather than thoughtful planning. Long-term investors understand that wealth is not built by winning every year but by avoiding major mistakes and allowing time to work in their favor. Perhaps this is the greatest opportunity available to young people today. In a world driven by speed, constant information, and instant gratification, the ability to remain patient, think independently, and act rationally has become increasingly rare. And precisely because it is rare, it has become one of the most valuable financial advantages anyone can possess. Warren Buffett's advice becomes far more powerful when it is viewed not as a collection of inspirational quotes, but as a practical framework for everyday decisions. The goal is not to predict the future with perfect accuracy. The goal is to make choices that continue to produce value no matter what the future brings. The first principle is to invest in knowledge before investing heavily in financial assets. Skills, judgment, and the ability to think clearly create opportunities that no market can permanently take away. Every book you read, every useful skill you develop, and every lesson you learn becomes part of an asset that continues to appreciate throughout your life. The second principle is to protect your reputation with the same care you would protect your savings. Trust is difficult to earn and remarkably easy to lose. Strong character attracts opportunities that money alone cannot buy. The third principle is to avoid unnecessary debt and resist the pressure to live beyond your means. Wealth is not measured by visible consumption but by financial flexibility. Every unnecessary expense reduces future choices, while every thoughtful decision increases them. Equally important is choosing the people who influence your thinking. Buffett has often emphasized surrounding yourself with individuals whose values, integrity, and judgment encourage your own growth. Over time, attitudes and habits become contagious. Finally, learn to evaluate every major decision with one simple question: will this create lasting value, or will it provide only temporary satisfaction? That single habit shifts attention away from impulse and toward long-term results. Whether building assets instead of liabilities, preparing instead of reacting, or choosing discipline over convenience, the pattern remains remarkably consistent. Small decisions repeated over many years become extraordinary outcomes. Buffett's framework is not complicated because lasting success rarely depends on complexity. It depends on consistency, patience, and the quiet discipline to keep making good decisions long after the excitement has faded. There is a reason Warren Buffett's advice continues to resonate across generations. While markets evolve, technologies transform industries, and investment trends come and go, the principles that create lasting wealth remain remarkably consistent. In the end, wealth is rarely the result of one brilliant decision. More often, it is the natural outcome of hundreds of sound decisions repeated patiently over many years. For young people, this carries an important message. The greatest advantage you possess is not a high income, a prestigious degree, or access to perfect investment opportunities. It is time. Even the world's wealthiest individuals cannot purchase more of it. Time allows knowledge to deepen, habits to strengthen, relationships to mature, and investments to compound. Used wisely, it quietly becomes one of the most valuable assets you will ever own. Perhaps this is Buffett's most enduring lesson. Compounding is not limited to money. Your reputation compounds with every promise you keep. Your judgment compounds with every thoughtful decision you make. Your knowledge compounds with every book you read and every mistake you choose to learn from. Likewise, small acts of impatience, poor habits, and careless choices can also accumulate, often without being noticed until years have passed. The future, then, is shaped less by dramatic turning points than by the ordinary decisions repeated every single day. Choosing to think independently, continue learning, act with integrity, and remain patient may never feel extraordinary in the moment. Yet over decades, those quiet choices become the foundation of extraordinary results. That may be why Buffett's greatest advice has never been about finding the next winning investment. It has always been about becoming the kind of person whose decisions naturally create wealth, opportunity, and a life built on enduring value. When that foundation is in place, financial success is no longer something to chase, it becomes a consequence of the way you choose to live.